This is Answers to Frequently Asked Questions about the Tax-Free Cash Growth Warehouse, brought to you by FSIC. This frequently asked question is, who can I insure as owner of a policy? First, a person must qualify as insurable before anyone can insure them. Some of the qualifications vary with each insurance provider. For example, some providers will insure people up to age 85, where others will not insure anyone over the age of 80. As far as I know, all providers will insure newborns. So typically, anyone from newborn up to age 80 or 85 may be insured, as long as they meet other qualifications of health and location. Typically, a U.S. provider will not insure someone living in a foreign country. Health qualifications also vary somewhat between providers. In most cases, a person who has been diagnosed with cancer in the last few years may not be insured until they are cancer-free for at least 5 years. Generally, no one with a terminal illness is insurable. There are some final expense, guaranteed issue policies that may be obtained for a person who is terminally ill, but that's a different discussion. Many illnesses, including heart disease, may not disqualify a person. A particular illness or degree of severity of an illness may affect the rating of a person for insurability, but not disqualify them. For example, diabetes or high blood pressure may only prevent a person from getting a preferred rating, but they may still qualify for standard. If the illness is more severe, a person may receive a higher risk rating, which may increase the premium rate, but not disqualify them from being insured. Each case is determined individually by the underwriters examining the case. Assuming a person qualifies as insurable, as the owner of a policy, you may insure anyone that you have what is called an insurable interest in. That obviously includes yourself, but it also includes family members, even somewhat distant relatives. In fact, a fiancé would also qualify there. If you have a business and you have partners in the business, usually any and all of the partners have an insurable interest in each other. Employees of your company may also qualify. You cannot insure someone you pick out of the phone directory or a casual acquaintance. So then, what would be the benefit of owning a policy insuring someone other than yourself? Well, since we are primarily interested in the financial advantages of the tax-free cash growth warehouse and strategy, for that purpose, owning an insurance policy that insures someone younger or in better health than yourself could be an advantage. First, if you are uninsurable due to age or health, you can still own a policy insuring someone else. As the owner of the policy, you own the asset. That is, you control everything about the policy, including the cash values and how they are used. So even if you are not insurable, you can create your own TFCGW and utilize the strategy to your advantage. If you are older and you want to get as much cash value into a TFCGW as possible, you may want to consider insuring a younger relative. That will cause the required premium and cost of insurance to be lower than it would be for you, and therefore allow more of your premium deposits to go into your cash value to leverage with the TFCGW strategy. Be sure to subscribe to this channel and you'll be notified as we post new fax answers and other content. And if you haven't already, do yourself a favor and click the link below this video and watch the TFCGW webinar, Become Master of Your Financial World.